In this video, I'm going to be talking about how important it is to use previous day's high and previous day's low in your daily analysis on your bias. So right here we see price failed to close above previous day's high on the daily chart. As you see right here, price failed to make a close above the previous day's high, and we made a large wick through previous day's high. So whenever we see price failing to close above previous day's high, we could anticipate previous day's low to be targeted. And as we see right here, price closes with the body below previous day's low. So now we also saw price closing below this low right here. So now that we know the price closed below previous day's low right here, we could also anticipate for the next day price closing below previous day's low. So now we want to see price closing below this low right here. And as we see, price closes below previous day's low. So now we would anticipate previous day's low again to be targeted. And right here we see previous day's low being targeted again. So now we want to see previous day's low again closing below. And that we see right here. Now I'm going to show you an example of a consolidation wick. So right here we see price has engaged with a fair value gap right here. And then we see price makes this low down here, also managing to close below this low right here, which is previous day's low. So now that we have seen price closing below previous day's low, we also would think price would close below this low, right? But no, because we have touched a PDH, which is this fair value gap right here. And this fair value gap is a bullish fair value gap, so that means it is willing to send price higher. So then we see this candle right here. This candle is a consolidation candle. And the reason this candle is a consolidation candle is because it stayed within the range of previous day. So it didn't take out previous day's low or previous day's high. So then we see the next wick, which takes out previous day's high, but failed to close above it. So then we would anticipate previous day's low to be targeted, right? And that we see right here, previous day's low is targeted, but we fail to close below previous day's low, and then we reach for previous day's high. And we also fail to close above previous day's high. But in this example, we see price have made a large candle, so I would anticipate the next previous day's high to be hit. Also, we have a lot of highs up here, which price hasn't taken out. So in that case, we'd both have our draw on liquidity up here and the previous day high. And then as we see, price closes above previous day's high. So now we would anticipate the next previous day's high to be hit. And then we see right here. And then finally up to the draw on liquidity. And even if we play it out a little further, we see price continues to close above previous day's high all the way up here where we seen the last previous day's low be targeted. Right here for the next example, we see price has both taken out recent days high and recent days low. So now that price is taking out previous day's high and previous day's low, we want to wait for the next candle to anticipate a new previous day's high and previous day's low. So now the target could either be previous day's high or previous day's low. So now let's see what happens. So right here we see price fail to close above previous day's high, so then we could anticipate previous day's low to be taken out. Right here we see previous day's lows get close below, so now we would anticipate previous day's low again to be taken out, but we have to be careful as there is a fair value gap within here. So let's see if price could manage to take out previous day's low. Right here, price takes out previous day's low, also closing below this value gap. So then we could anticipate lower prices. So now we'd anticipate previous day's low to be target. And right here we see previous day's low get hit again. So now this is the new previous day's low. Same right here. And the same right here. So now we would anticipate a previous day low getting taken out and a close below this value gap over here. And right here we see price fails to displace below previous day's low and take out previous day's high without a close above it. So then we could anticipate previous day's low to be targeted. And that we see price do right here, also closing below this value gap, creating a inversion value gap. As you see, it's very easy to anticipate where price should be going when you are targeting previous day's low and previous day's high. And also in the meantime, when price is creating form of PDL raise that is also a confirmation that price is willing to target previous day's low and previous day's high. In this example, I'm going to be talking about what a consolidation candle is. So a consolidation candle or an inside candle is whenever price fails to take out both previous day's low and previous day's high. So when price fails to take out both previous day's low and previous day's high, where do we anticipate price should be going? So as we see, right here price took out previous day's high without closing above it. So in that case, we would anticipate previous day's low to be hit, right? But as we see for the next day, we failed to close below previous day's low. And also, as you see, we have had bullish structure. So in that case, I would be targeting previous day's high for this case. And that we also see price do. Also, we had this high up here, which would be a draw on liquidity. And lastly, we formed a order block. So that's how you could anticipate where price should be going after a consolidation candle or a inside candle. Right here we see price failed to take out previous day's high, and as you see we have been having a lot of bullish structure recently. So in that case we would be anticipating previous day's low and making a inversion value gap. And if we do that, we could maybe anticipate lower prices in the future. So let's see what happens. And right here we make a large candle to the downside, both taking out previous day's low and making a inversion value gap. And we also made a volume imbalance. So now we have confirmations the price is going to go lower, and we also have a change in stability right here. So now we would be anticipating previous day's low to be targeted, but of course we have to be careful as we're in a value gap right now. And right here we see previous day's low being taken out, but we also touched the change in state of delivery. So then I would anticipate previous day's low to be taken out. So right here we take out previous day's low, and then we touch this volume imbalance right here. So in that case, I would target previous day's low. And right here we see price fails to take out previous day's low. The last example, we see price has failed to take out previous day's low, as you see right here. And we also made a value gap. So in this case, I would either target previous day's high and then think we would go lower from there, or I think price would go down here because we have almost equal lows. And as we see right here, price fails to take out previous day's high and go up to this value gap, and we just straight up target these two lows down here. So now that we have failed to displace lower than these two lows, also touching bullish PDL raise over here, we would anticipate previous day's high to be taken out. And right here we see price fails to take out previous day's high and goes for previous day's low. So in that case, I would target previous day's low and sell side liquidity down here as our next target. And right here we see price takes out both previous day's low and sell side liquidity. So as you see, using previous day's low and previous day's high for a bias is really good, but you are not going to always be right. As you see, I wasn't right here as price took out previous day's low and sell side liquidity. Then I anticipate price would take out previous day's high, but it went for previous day's low. So that was it for this video. So if you liked this video, please like and subscribe. And if there's anything you didn't understand, or if you have any ICT concepts that you want to learn more about, just comment down below. And also, if you'd like to engage with other traders, you can join my Discord. Link in the description. It's totally free.